Good morning, everyone. Tell me, based on yesterday's price action and market close, did you think the markets would be higher this morning? A gap up, maybe gap up and run up toward this area of major resistance up here. Honestly, that's what I was thinking. In yesterday's video, I talked about this low here and then the gap down. That weakness would be retesting an area. The third time coming down to test this major support area, and if buyers would step up, well, maybe they can get something going. And they did, and with a strong close like that, I was thinking, it would probably be higher overnight, and they were. You could see, here's the overnight session. It moved a bit higher, and then we had this breakout over to the left. There's the price resistance and breakout failure, and now coming down into this intraday void. So I've talked a lot about voids, giving you a lot of insights into voids and how to use them and what they typically, the price action results, when they enter them. Now, we haven't had any big moves because the voids come like these big, huge days like, oh boy, here we go. Power to the downside and immediately reverse. And every time I tell you, look, halfway through, that should hold prices down at that level if we're going to go lower. I don't remember the video. I probably said, over here, we probably test the major support, rather going right back up to test resistance and then right back down and then up and down and chop. And it's been a mess. And that's one of the videos was titled, a daily price pattern chart is best to avoid. And that's this one, this kind of a chop. Now, that being said, with a day like yesterday, was reasonable to think, must have been because I thought it, kidding, but I think it's reasonable to think that we would have started the day higher and then when in an attempt to go up, into maybe the 10 o'clock or 10:30 reversal period, rather than just hitting this resistance area in immediate failure. So, what it's telling us there is that there are buyers lurking at the lows and sellers lurking at the highs, and we can say it's coming into some type of a apex where things have to go one way or the other. Now, one of the things that made me think that maybe today wouldn't open up so positively, just a small piece of information doesn't always result in a particular day, but an immediate reaction is what I should say. But when I saw this last night, I kind of looked at that daily bar, that powerful daily bar reversal, and I said, geez, option traders are all running into the close to bet that the market's going to go higher versus a more neutral close, which would really support the market to go higher. Now, obviously didn't mean that the market would open lower, and I guess we still got about 20 or so minutes to go. But it's a good thing to look at day to day just to see where that closing put-call ratio is, and then I look at a moving average of those closes for, a short-term indication of when sentiment has reached a bullish or bearish extreme. So, this choppy trading range and option traders running to the close to load up on calls, looking to profit for, what could have been a move in toward the end of the week. That's a trade, and especially with that type of a daily bar. Would have been, I don't think anything wrong with it, but when you see that you're on the side with the majority there when it comes to sentiment, usually not a good sign. So anyway, we'll see here. Now with this run up, now there's no support, and you can see momentum run higher. So there's the concept of the void. The big moves down create voids, which open up the possibility to go back up. But if they can't, well, that's weakness and back down. So we kind of got halfway, a little more than halfway through on that big down bar, and now we're chopping within the halfway area of this upper bar where, when the media was saying, oh, broad-based rally, that's great, markets are going to go higher, blah, blah, and, here we are still stuck, within this range here. And now it's opened up the possibility of dropping all the way back down And we shall see. Now, from a more intermediate term perspective, the weekly chart here, and again, I'm thinking ahead of what is here, what might or what might be, but it's just a thought. It's the possibilities. Is that if we turn out and get a red week, right? Because this isn't an uptrend, and I mentioned the fact that that was that strong momentum move, and you had another one that was an okay, and then you see this one. The line is getting shorter and more of a rounding top, right? So what I'm pointing out to you here is the power of these moves, or the momentum, is dissipating, and now we've got more of a rounding top. So this green candle right here in this area of major support, if this week turns out red, right, close below its open and near the low, well, historically that is going to result, probably in a move at least down to there. And then you might want to go and look at some of the videos for last week where I showed you downside projections of 5%, about 7%, and 10%, just to see where they are and how they line up with price support. And that give you kind of a guide as if this correction does start to pick up steam to the downside. You got some downside targets that a lot of institutions will be looking at. Okay, so Qs here, and they hit their resistance and came back in, and just overall it just continues to be a choppy mess here day to day in a weekly uptrend and momentum. Just show you again here, strong momentum and up, and then look at the distance between the highs. And I show this to those of you that are of the indicator group, or you're inundated with indicators, or somebody's trying to sell you one, and this is all these indicators look at that are telling you that they can project or predict a turn in a stock or a market, and they can only follow price, right? So they go up and they supposedly get overbought and they come back down, right? And then whatever, they make their little lower high and another lower high, and they look bearish divergence there. Well, just look at the price. Look at the speed or the momentum which prices have, and when the highs get closer together, the momentum is slowing. It's as simple as that, and you don't need this. Forget the trend lines and the channels and all of the other hocus pocus. Just learn how to read a price chart, and that's what we do. All right, Dow holding up a bit better, but topping tail today. Bonds, miraculous recovery after a collapse. This is the MO of this market, of doing this in other parts of the market, not just bonds, but a collapse and a grind right back up to make a new high, which means interest rates are coming down. Excuse me. Interest rates are coming down, and we're hearing that GDP is increasing and the economy is doing better. Well, why are interest rates coming down? Those two things don't go hand in hand. As the economy is getting better, interest rates go up. And interest rates go up because there's a demand for money, right? It's supply and demand. So as the demand for money goes up, bankers say, you want money, pay for it. Higher rates, they're not. They're going down, which makes you have to be skeptical about the news. And in addition, the transports will typically lead. Now, is this going to be another miracle recovery in the transports after breaking down? They've been showing relative weakness, and now they had a nice day yesterday because of stocks. Not so much that airline, but maybe the rails. I didn't look at them, but the airlines turned around the other day. And CXS had a good day. And the best in the group is FedEx. Right? This looks great. As far as this is what's going to lead the transports if they can go higher. And look at this shakeout pattern. Downside shakeout, bullish bar here. It's up pre-market. breakout on the weeklies, pull back to a rising 20, several days hanging here, and now up. That's a long, my friends. It's a nice looking chart, multiple time frame alignment, and I like that. So, all right, it's kind of long for one of my videos on YouTube here, so I hope you've enjoyed that, gotten a few lessons out of that to use in your own trading, and we'll talk tomorrow.